Chris, very good to see you. We have a very important topic today. If you don't have long-term care insurance, the government may tax you. I know this isn't news to you, but it was news to me. We've discussed before the best time to buy long-term care insurance is before you need it. Well, now you might not have much of an option. That's because 13 states are considering mandating long-term care insurance. In fact, in Washington, the mandate has already passed. Residents who don't have a policy will face a payroll tax of 58 cents on every $100 they earn. Chris, do you see more states adopting this mandate?
Hey, good afternoon, Erin. Absolutely. The government is obviously stressed for the high cost of care, right? Taking care of our loved ones costs a lot of money. New York is right next to me. And although I'm in New Jersey, once things happen in New York, New Jersey and Pennsylvania are typically next in line to introduce these same types of policies. So it is something that is absolutely top of mind for us and our clients because, we see it's coming. And like I said, I have advisors in Washington that have already went through this. So I'm very well informed as to what's coming. And it's not a matter of if, it's just a matter of when.
Interesting. Well, I'm glad we get to talk this through because you brought up several great points there. But first, the government clearly concerned about the increasing cost of nursing homes, which is expected to rise from $12,000 a month to $23,000 a month by 2050. And there's also speculation that this could become federally mandated. So how should we prepare now for the eventuality that we will be mandated to buy long-term care insurance?
Yeah, and you just ruled out a whole plethora of cost and concerns. We at Professional Planning Services are planners. I'm a financial planner with over 30 years. And first and foremost, we have to plan for the future. None of us have a crystal ball. But once you've experienced a family member, a loved one, going through some of the procedures or maybe trying to take care of mom or dad yourself, or maybe having discussions with your family member, you realize that this is a huge, pardon the word, but it is a burden on the family. So now when you add cost, right, into this equation, right, what are the consequences if you don't have a plan? That's really the question that should be asked. And so one of our first and foremost conversations is that we cannot listen to boilerplate language or even think about that we already know about long-term care. I already looked into it. It's too expensive. That's what we hear all the time. There are solutions that have been created that we absolutely should be looking for and customized to your family's specifics because it is not one size fit all.
And what was the special designation that you just achieved, Chris?
So a certified long-term care specialist does allow me to really get into some of these intimate conversations with family and family members. I'm going to see a client tomorrow he's been my client for 15 years. And the son, I called him because I said, I have concerns about your father. And he goes, so do I. We're actually selling the house and moving him up by me. And so all these things are he's only 73, but I started to notice he was physically in good shape, but he was starting to slip on his memory. And this is becoming more and more common. One of the statistics I heard, Erin, was every 65 seconds, somebody is being diagnosed with dementia.
Wow.
Right? That's an alarming rate. And so, again, it's not a matter of if, it's a matter of when.
Right. 7 out of 10 people will need long-term care at some point in their lives. Good point, Chris. So just to underscore how important this is to the government as well, following the passage of the Secure Act, take a look at this. You may now be able to buy long-term care insurance directly from your 401k. Can you explain this provision?
I think it was Ronald Reagan that said, when you hear this statement, I'm from the government and I'm here to help, you should be concerned.
Right.
It's obviously a concern to the government because they've allowed people an opportunity to pull money out. But if you read the language, it says, hey, you're still taxed on this money and you'll avoid the 10%. So not only have you rated your retirement plan in an effort to put a plan together, but now what really I think is the bigger question, the promotion that they're really sort of encouraging here is old traditional long-term care benefits. And the old plans, one of the biggest concerns and observations through my years is that those rates are not guaranteed. And part of the downside with them is that it's either use it or lose it. Never been a fan of those plans. So it's now with the creation of some of the newer products, I call them asset-based long-term care. There are strategies that you can put into place for you, your family, your loved ones that guarantee the rates not to increase. And that if you don't end up using it, that there could be a plan there for you, your loved one, or pass on to your heirs.
Mm-hmm. And you brought up a really good point when we were talking offline. Acting proactively is so important because not only will you be kind of protecting yourself no matter what the government does, but we don't know when that look back period is going to be for what the government decides either.
Yeah, so in Washington, they were able to, a lot of people, we have an advisor, I think I mentioned that is out in Washington, and he wrote more long-term care applications than he ever had in his previous 20 years. However, one of the things that starts to become commonplace with government, when they start to see a run on people trying to secure policies to negate or to avoid the expense of a tax that they've now passed, they will make that retroactive back to the date of the filing of the proposal. So that brings up New Jersey and Pennsylvania in this area. If your state doesn't have a proposal on the block yet in front of Congress, that you really should take a hard look at putting some type of plan in place, and we can help you to strategize to make sure that it fits into your budget and it's not breaking the bank.
Yes, so important. And again, so important to act proactively. Chris, if somebody has questions about designing their own long-term care insurance policy, what's the best way to reach you?
So the first is our website, right? professionalplanningservices.com. You can go right on there, and we have actually a link there that they can go on. We do not need sensitive data. But if you want to plug in some of your basic, your age, your height, your weight, smoker, non-smoker, we can then get in contact with you. We'll never chase you, but we can start to set up a time, a Calendly conversation, 10, 15 minutes, just to see what are the possibilities for you and your family. And then if you want to pick up the phone and call our office, you can call 732-302-1810. We're happy to help. We're experienced in this arena, and it is one of our specialties.
Absolutely. I can tell whenever we get to talk about it, Chris. Thank you very much for your time today.
Erin, as always, thank you.